Hello everybody and welcome to this week's Motor Trade Radio podcast, brought to you in association with eBay Motors Group. It is Saturday the 29th of May and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 30, season 7 of Motor Trade Radio, bringing you all the chat that matters. And once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
So, I mean, we've got a special interview this morning, but I mean, we must give a shout out to the interview that we did with Daksh Gupta, who's the boss of Marshall Motor Group Holdings, and I mean, what a fantastic interview that was, following the acquisition of the JLR operation down in Gloucester that they did on Monday from the Heritage Group. But it was all things industry-led, wasn't it? Agency modelling, the Stellantis contracts.
We covered so many points on that, and all the while we were doing the interview, Dash told us afterwards that he was actually walking. He was pacing. He paced over 7,000 steps whilst we were interviewing him.
Yeah, so he's a busy boy at the minute, but I think he does make a point that if you are busy, it's easy to get things done. I think he was alluding to the point that somebody else was doing the move for him, and he was just ready to go and sit down, put his feet up, and watch some more Man United football, I think. But we won't go there.
No, because it wasn't a good result for him. As I saw on social media, he was getting hounded.
He was. So we better get on, because we have got a special interview this morning, haven't we, Curtis?
We have, we've got an interview with Cap HBI's Derren Martin, and we're going to go straight to Derren now. And it's on the back of the newly published editorials. So welcome back, Derren.
Thank you.
So the headline that caught our eye this week was from Motor Trader, and it was unprecedented used car demand drives 6.7% May value increase. So as I say, this is based on your latest editorial, and can you just talk us through what actually drove this rise?
Yeah, so the average increase is 6.7%, which on a 3-year-old vehicle is equates to around £825. It's really difficult to express what a change that is. Normally the market drops. Normally cars, as they aged in their life cycle, you get value drops. On average, that's by about, I would say, sort of 1.5%, maybe in a fairly normal month, maybe slightly less than that, but for values to go up by this amount is really, really unusual, and we've been moving values up in our live product every day. Keep saying that our monthly data was out of date as soon as it was published, and live values have been going up by extraordinary amounts. Really, it's driven, as everything is with used car values, by supply and demand. Demand out there from retail consumers looking to there's accidental savers, there's pent up demand, there's people that are upgrading to aspirational vehicles, and then obviously you've then got the retailers looking to replace their stock or to stock up in the first place, and there are concerns that there isn't enough stock out there. There are concerns that there won't be enough stock going forward because of the semiconductor issue that has been widely reported, but is still a little bit of the unknown. And then you've got remarketers that have been putting their prices up based off this. There are obviously lower registrations last year, lower registrations this year, lower registrations in March and April than in normal times, which means there's less used cars back in the market from part exchanges and fleet returns, and so with supply and demand dynamics, you've got the suppliers putting prices up, and you've got retailers that need to buy cars because you can't sell an empty space on your forecourt, and it's just led to prices going up by almost ridiculous amounts, really. some of the data that we've received from specialist remarketers has been at sort of 110, 115, even 120% of cap monthly. So the auctions have been selling at a high percentage as well, but not quite to that degree. And it's just it's led to price increases pretty much across the board.
And I mean, you made on the webinar this week. You made a point of obviously this, because it is moving very quickly, isn't it? I mean, the speed in which that has moved since last month you published the monthly figures, and making that point on your webinar that live is the only way really to keep ahead of, or to keep in line with the market, because things are moving at such a rate, but also that I think you also highlighted that there is this lag still between retail and wholesale in the market, so you can't really necessarily rely on retail to drive your purchase decisions at trade at the minute either. So do you want to just share your thoughts on that a little bit?
Yeah, it's a really valid point that, as I say, monthly data is out of date almost as soon as it's published, and there's got to be an argument for getting rid of monthly data altogether. But I know people are setting residual values from it, and in more stable times, it's obviously still definitely has its place. But for anybody looking to buy or sell vehicles, you've got to look to live data. If we receive sold data today, it's for cars that sold yesterday, and we're reflecting those values today. So we've already moved values since we cut off for the monthly products. Values do continue to go up at the moment. So yeah, that's very much the case. But yeah, on the retail point, retail values have definitely not moved up by as much as trade. There are retailers that are still advertising cars at prices for what they may have paid in the trade for them a few weeks ago, maintaining their margin from what they paid for them. But when they go back and try and replace those vehicles, they can't replace them for anywhere near what they paid for them a few weeks ago. So retail values, we have seen a bit of an uptick this week in retail values, but they've not been going up anywhere near as quickly as trade. And if you want to know what you should be paying in the trade, then live trade values are definitely the only way at the moment, really. And you can't just base it off what you're seeing in the retail, because you can't replace the cars to maintain a margin for what some of those cars are selling for. Different vendors that have put prices up, but some of them certainly haven't put them up by as much as they probably will need to maintain those margins.
And Derren, this is just to put this into context, this is the third successive month of increases. So March, we just had that sort of marginal increase of 0.1%, followed by 2% in April, and now 6.7%. So that is quite a jump. How long is a good question for you. How long can this actually go on? And is there a concern that we might see a crash as a result of these values going up?
It's really difficult to predict how long it goes on for. I think that values will not go up by what they have been going up by, but I think they will probably go up in June by a smaller amount, but I think they'll certainly stay strong. We don't think that there's going to be a crash coming, certainly not over the next few months. I think what you might get is a summer of strength, and then maybe some return to more normal sort of drops from the end of the year. But there's no tsunami of stock coming that will affect the supply levels dramatically. And demand may well drop off as we enter the summer, dependent on if people are looking to foreign holidays. If the world sort of opens up a little bit more for us with regards to travel, people may divert funds that way and not look to buy vehicles. But I think that will be less than it has been in previous years anyway. So there will still be people out there looking to buy used cars. And I think it will stay strong for quite a while. The semiconductor shortage will mean that there aren't as many as normal new cars coming through. I think at the moment you can switch a customer into a different vehicle. You can switch a company car driver into a different brand or into a different vehicle that is in stock. But I do think that semiconductor shortage issue will maybe hit stocks harder over the next few weeks and into July. And then what do you switch somebody into if you haven't got something to switch them into? It's then difficult, and that will then hold back some of the used cars that you would normally see. You've also got leasing companies that are informally extending leases because of low mileages. So those cars aren't coming back into the market either. So as I say, there's not an abundance of stock that's going to come back in that will affect those supply demand dynamics. Demand might drop off, but I don't think the supply will increase.
You highlighted before, obviously, that increase in sort of significant sort of movements, but and within your editorial, and I think you highlighted it this week on the webinar with some sort of significant winners of movements, and I think you talk about Audi A3, Mazda 6, BMW X3, and many others. I mean, one of the highlights is the BMW X3 going up £1,500 a 3-year 60 plate at 6.2% increase, and others. I mean, Tiguan, I think the figures that I saw was a 10% increase on Tiguan petrol at £2,400 increase at a 1-year 20. Where is there any losers? I mean, is it all positive, or is there some weakness in certain areas still in the market?
There's very little weakness. The older cars aren't going up by as much. They're more stable in the trade data that we're seeing, but I think there's probably the older cars that are going through sort of trade to trade sources are probably not as in good condition, because dealers are holding on to more part exchanges than they ever have done before. But franchise dealers that are now retailing other brands and older cars to make money. And I know there's some businesses out there that have certainly done that over the last year. So it's hard to pinpoint anything that has not gone up really this month. I mean, obviously not everything has gone up, but it really, the highlights should be the ones that have, and the ones that you've mentioned. You've got Audi A3. I mean, you've got things like Vauxhall Zafira. It's gone up 10%, which is £750 on a Zafira. That's quite a big increase. I mean, some of the biggest things, like Mini Cooper S, has gone up 18% in the month. That's over £2,000 at 3 years. Renault Kadjar has gone up. Seat Leon has gone up by 15%. Qashqai has gone up by nearly £1,500. You've got Cougar Diesel has gone up by £1,200. These are all trade figures. It's Suzuki Jimny's gone up by £800. That's gone up by almost 50% over the course of the year. There's some really crazy stuff out there. I can't overemphasize how unusual this is for these price rises, and it's all based off the sold data that we're seeing, and the fact that remarketers have put their prices up because supply levels are lower, and also because there's concern over the next supply levels that are coming, and then auction prices have been dragged up by that as well. So it is crazy times, but some of those increases and convertibles again have been going up, and they've been going up most of the year, and some sort of eye-watering increases there. But the consumer doesn't necessarily know what those cars were worth a few months ago or what they were worth a year ago. They just know how much money they've got, how much that they need to pay for them, and the decision is then theirs whether they pay for them or not.
And a key point there you made that we're looking at this 6.7% in terms of the movement into June, on top of obviously that takes the year to date to 4.5%. But you made a point there. But the movement of pound value, and I think you highlighted on one of the last times you came on the podcast with, I think it was E-Class convertible going up £10,000 in a year. This is again on top of those significant year-on-year movements that the market has seen. So when you start, I think you just mentioned it then, with a 50% increase in a 12-month period. That's the key bit with some of this, isn't it?
Yeah, it's crazy, as I say. So some more figures. Sort of BMW Z4 Roadster has gone up by nearly 38%, which is nearly £6,000. A lot of the biggest rises are sports cars and convertibles, sort of those aspirational purchases that people have looked at over the last year and making I guess it's like a lockdown purchase. People are extending their houses, people are moving, or people are buying nice newer used cars that they know they can afford. But at the moment it's difficult to perhaps get that new car that you want, because because of the supply issues. It's very brand dependent, the new car supply. But on a used car side, you go out and look for something that maybe you never thought you would be able to afford, a Mercedes S-Class Cabriolet, but now you can, because you've not been going out, you've not been going on holiday, and you want to buy something that makes you happy. So yeah, some of those increases. There's lots of cars that have gone up by sort of 30% plus over the course of the last year, and obviously some of that increase has been over the last month. Which, when you look at a chart of the monthly movements, 6.7%. I mean, we've had to change the scale on all of our graphs because it's just ridiculous for that figure to be for that to be a figure in a month and for it to be going up. Both of those things are really really difficult to sort of to get your head around in a way.
You know what, Derren? I'm beginning to wish that I'd bought a Z4 a couple of months ago.
I think you're not the only one that's wishing they bought certain things 12 months ago.
Hindsight's a wonderful thing.
I've
been laughed at for saying that cars are now an investment, because they certainly are at the moment.
And Derren, when you provide this monthly update, you always look at trends by fuel type. Now, I was looking at these, and it's quite interesting because petrol, on average, was up 7.2%, followed by diesel, which was up 6.4%. So that's pretty close, and it does sort of indicate that there's still strength in that diesel market.
Yeah, definitely. There's been strength in the diesel market all year. It's if you look at what's happened over the course of the last sort of 12 months or since the pandemic, it has been petrol and diesel cars that have tracked remarkably similarly to each other. I guess there's lower volumes of diesel cars out there now. Certainly regional differences, depends where you live, but diesel still has a place, and you've gone are the days of a big puff of smoke coming out the back of your car and being terrible for the environment. Those diesel cars are a lot cleaner than they ever were, and they're still sought after. They're still in demand, and it has been electric vehicles and hybrids and plug-in hybrids that haven't fared so well over the last year. But having said that, on average, those values have been going up this month as well. But it is more difficult to push up a retail price of a PHEV or an electric vehicle when those prices are already quite expensive, and the consumer will then look to the petrol or diesel equivalent and think, well, that looks a lot better value for now, and unless they need to have an EV for for sort of their local area or something, then maybe the incentive isn't there for them to buy it as a used car. And you can't get away from the uncertainty of range anxiety and where you're going to charge it up and those sorts of things, and can you make that long journey that you need to without having to stop for a coffee, and it's not just going to a petrol station. There are still barriers to adoption really for those sorts of vehicles. But yeah, petrol and diesel cars have those old not old cars, but the traditional propulsion methods are still what people are buying and paying more for.
So I think really conscious of time for you, because we can probably spend hours and hours trying to put the market in context of what's happening, but I think it's you summed it up, it's unprecedented, it's moving constantly at the minute, and you're in high demand at the minute in terms of trying to explain and put context and around what is happening in the market. But in terms of looking forward, and we mentioned earlier around the wholesale volumes, will it change? When will it change? Is there something around the corner? And what is June looking like, really? Or is this where you hand it on to somebody else and let them worry about what the future looks like at the minute and focus on the here and now?
I swear I absolve myself of all responsibility. Someone else can do that. No, it's in all seriousness, the sold data that we're receiving is above where it was in 2019. So cars are selling in large numbers, but obviously their conversion rates are up, so the stock levels are not as high. But the actual data we're seeing is more than we've seen in the past. It's obviously more than last year because of what happened, but it is more than in 2019 as well. So those sales rates are still high. And continue to be so. As I say, they're tracking ahead of 2019, and I think the market will stay strong in June. There are obviously the caveats that I've said around holidays and things like that, but I do think that demand will stay strong. Values continue to move up every day. That will slow, but I certainly think there will be another positive movement over the next few weeks. And as I said earlier, I think there will be a summer of strength. I think values will stay strong over the summer, but it is really difficult to call. No one would have expected what's happened now. I certainly didn't expect this strength. Now, I didn't think it would be as strong as last June, because when we went into last June, there'd been pretty much no activity for 2 months in the used car market, whereas there has been activity in lockdown. Everyone is now set up to sell online, and the consumers now more prepared to buy online. You can buy from the auctions online, whereas April and May last year that was a lot less. So activity levels will stay strong, but I just didn't expect it to be as strong as this. So it is really difficult to call, but I do think there will be increases certainly over the next few weeks, but not to the degree that they have been in May.
It's fascinating what you say about going into this summer of strength.
Yeah, I think that we might see over the next month that the retail values will be sort of catching up with trade to a certain degree, but I still think that you need to be looking at live trade values to see what you need to buy and sell your cars up, sell your cars out in the retail, in the trade market. So it may catch up to a certain extent, and I guess for retailers' point of view, we hope it does, because they do need to maintain their margins.
Well, I mean, I think maybe we get you back on before the end of next month, and because I think the market is moving at such a rate, and maybe there's a special midweek one that might be worthwhile, and deep dive into a little bit more detail of what's happening. So, as always, Derren, it's fantastic to have you on, and we can talk about this all day. But I know you're busy at the minute. You're in quite demand, as I said earlier, with some of the nationals as well. Want to know what's going on.
Daily Telegraph, Financial Times. They've been in contact with us and done interviews with them. So it is. I think it's a story for the country, isn't it? Not just for our industry. I think the fact that consumers are having to pay more for cars, or will have to pay more for cars than they've done in the past, it's a sort of an inflationary story that everyone's interested in.
Fantastic. Well, thanks for joining us this morning. It's really appreciated, and anybody that there is press releases. We're going to talk about one in the headlines this morning, but you can go to the CAP HPI website and look up the editorial as well to get a little bit more detail, and I'm sure all the webinars and other things are out there. But I know you said on the webinar this week, Derren, that you and the team are there for any customers that are wanting a little bit more detail and have conversations about what's going on.
Yeah, definitely, because obviously one of the concerns for retailers is paying high prices now. They don't want to catch a cold going forward if demand does drop away and the consumer sort of bulks at paying those high prices. But it's a difficult situation with prices being high. We never thought we'd be in that sort of situation where the prices have gone up so dramatically. But I think dealers should continue to buy cars in the trade, and then they're going to have to pay what the prices are, and then pass those sort of increases on to the consumer.
Fantastic. Well, thanks a lot, and look forward to having you on next time, and maybe not in a month's time, but maybe sooner. But thanks for everything. Really insightful as always, and we'll speak to you next time.
Yeah, great.
Thanks very much, Derren.
All right. Cheers. Bye.
Cheers. Bye.
I mean, great stuff going on in there. I mean, you say that, Curtis, we could probably get into a lot more detail in there, but it is unprecedented. Lots of going on. I think from memory, I say not memory necessarily, but from data I've had sight of, that I think the last time we saw any increase of a similar rate was back in April of 2009, which was obviously the financial crash, and that was a 6.8% movement. So I think it's a significant movement for the sector, and one that, as Derren said, moving very quickly.
It is, yeah. And what was particularly interesting there was, what Derren was saying about live data, and 6.7 was the figure that was released only yesterday, I think. But chances are that's moved on now.
So, I mean, if you'd like to come on to the show, and you want to share it, or you've got any news or press releases that you'd like to share with us, then do please, message Curtis or myself on either LinkedIn or Twitter, or you can email us on motortraderadio@yahoo.com. So please do that, and we'd welcome you onto the show.
Yeah, now let's have a look at this week's headlines. It's been a busy old week for the sector, and what we've decided to do this week is the first half of the show is really themed around the used car market because, as Derren highlighted there's so much going on. So the first couple of stories are erratic supply of used cars sees some extraordinary pricing. The next story is used cars sell faster in May than any point this year. And that's actually an exclusive for the podcast from new data released by eBay Motors Group. Trade Centre UK plans to transform a cinema in Warsaw into a used car centre. And final story this week is Hendy partners with CarZoom to launch a new rentals service. So that's a new name to the sector.
So as you say there, I mean, the first story is that erratic supply of used cars, and that's over on motortrader.com. And this is really from Kazana's director of Insight, Rupert Pontin. So he's obviously highlighting where this the shortage of used cars, as Derren has clearly highlighted there, is challenging the dealers in the current marketplace.
Yeah, and he picks up on a point that, funnily enough, Derren just made, because he says he actually warns that the rising wholesale prices cannot be met by rising retail prices. So the coming weeks are going to be fascinating to see how that actually plays out, because we've got wholesale rising, retail rising, and somehow dealers have got to make a margin out of these used cars.
Yeah, it's like you say, it's going to be an interesting one, and it's Derren and Rupert there making clear points that never has it been more important to keep an eye on the market, understand what's happening in the market. This isn't about what happened last month or the month before. This is about the here and now, as to what's happening with that supply and demand. Clearly, as both point out there, that supply of new cars is now having a clear impact on the sector. Around supply of used cars, there are people out in the market now since the restriction lift back in the 5th and the 12th of April for Scotland and the rest of the UK there. But it's how long. The big question is, how long will this go on for, and what is going to be the short to medium term impact. But again, I don't think anybody's thinking about that at the minute as to how long that could hit.
Yeah. Now, the next headline is actually an exclusive for us, and it's from eBay Motors Group. So it's their monthly analysis of trends. So it's the market view for May, and there's some fascinating stats in this. So used cars actually sold faster in May than at any time this year, averaging 39.3 days on dealer forecourts, and that compares with 42.5 days in April. And this interesting, this speed of sale is now more closely aligned with those pre-COVID averages that we saw in May 2019. So it's not that helpful looking year on year. We've now got to go back to 2019 to compare it with how the market was performing in normal times. So the pre-COVID average back in May 2019 was 36.3 days. So it's getting closer and closer to that, which is an interesting trend to monitor. And the fastest selling cars in the UK were recorded in Scotland, averaging just 31 days, followed by Northern Ireland and the Midlands, both averaging 35 days. And the slowest selling region was the southwest of England, where cars averaged 50 days. So quite a large regional variation there.
There is, yeah, and you make the point with around the pricing and things like that, but they've also, within the market report, they do highlight the variance of the prices of the market between the car supermarket, the franchise independent sector, and if you're looking at April 21 versus May 21, so that move in month to month, and fairly stable in many ways, isn't it? I think car supermarkets 0.9% up. I think franchise dealers are minus 1.4% down. Independents marginally up at 1.7%. But overall, the average retail price between April and May of this year has actually dropped slightly, hasn't it, by 1.9% from 12,594 down to 12,356. But some of that could be that they're actually stocking different price vehicles now because of the desperation of product and filling those forecourts, that actually the stock profiles have changed since April.
Yeah, I think you're absolutely right, and these prices are really based on the top 50 makes and models being advertised on the motors.co.uk website. And in terms of that model mix, the only sector that you named there that actually saw a drop was the franchise sector. But as Derren pointed out, franchise dealers are selling more part exchanges than they were before, part exchanges that normally they'd trade out, and they might be slightly older than their typical stock mix.
I mean, the market view, is it available Monday, I think, to the market?
Yeah, it'll be on the eBay Motors Group website on Monday.
So there is a lot of detail in this, and we would urge you to. You'll see it in the media when it does become available, and I'd head over, because it does give you a lot of detail around average days to sell by sector, your average days to sell by region, and dig down into some of that detail a little bit more in terms of what they're seeing through the eBay Motors website there.
You're listening to All the Chatter That Matters on Motor Trade Radio, brought to you in association with eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines, and available on demand wherever you are on your podcast feed. So next headline, we'll go over to AM Online, and it's Trade Centre UK. And we seem to be doing monthly updates on these guys, because not only have they opened a brand new site in Rotherham at the beginning of May, which we reported on a couple of weeks ago, because it's an old home-based site, which I think you know, don't you, Phil? Did you used to go there to get bits and pieces?
It might be a bit far for me, but I do know of it, but it wasn't a frequent. I did have close. Well, you're assuming that I do things in terms of that DIY. It's like assumption. I think it might be the wrong assumption there, Curtis. I think.
Fair enough.
Yeah.
But the headline is Trade Centre UK to transform Walsall Cinema into used car supermarket. So a nice little piece from AM, which they've picked up from a report that was published in the Walsall Express and Star newspaper, revealing that the used car supermarket has acquired the cinema, and it's located next to junction 10 of the M6, because obviously all their sites, it's absolutely key that the access is good. So this is a good location, and the report says that it plans to transform it into the largest car supermarket in the Midlands. So that must be a sizable site there.
Yeah, I mean, you can see in terms of that accessibility and locality, that just off that junction 10 of the M6 is the perfect location, isn't it, for that kind of operation. And kind of, I mean, as you say, we've mentioned Trade Centre. I mean, it's trying to forget that we used to refer to it as Trade Centre Wales, and
yes.
And trying to forget to refer to it that way now. But the speed in which these guys are growing, and I suspect that they've probably got their eye on more locations as they continue to report profitability. I think the big question for me on this one, I don't know what your thoughts are, Curtis, is at the minute, with the conversations we've just had there with Derren and the reports from Cap HPI, and obviously what Rupert was just talking about there from Khazana, is these guys need stock.
Yes.
And they need lots of it.
Yeah.
And at the minute, there isn't lots of it. So I suppose, is there going to be some winners and losers with some of this as we go forward?
And now we're going to head over to our interview with Daksh Gupta. So as we mentioned at the top of the show, we spoke to Daksh earlier in the week, and it was immediately after the acquisition of JLR Gloucester from the Heritage Group. And Daksh covered a wide range of topics. So we'll go over to hear what he has to say.
It's really difficult. I mean, Philip, we've never seen anything like this, have we? So it makes it very difficult to plan. I mean, I think, some of our brands we look at, and one of our brands is saying, guys, we're not going to see an issue. And I'm thinking, okay, interesting. And then, others, who are related, shall we say, to that same brand are saying we're going to see a significant impact through Q3. Some, you read some articles and they're saying this is going to be around with us till 2023. So it's really, really hard. As I said, we've not seen any material impact so far, but it is definitely getting some noise now. And I think the other thing that, I think one of the brands recently, I think it was Mercedes, went first. And good on them for being. I think they would have been required to put some sort of announcement out, which they did, I think, about 3 weeks ago around their situation. And then, of course, others followed. So, Land Rover obviously wound back production. Mini have done the same thing. So quite a number of. I think everyone's in the same situation. I think the stat I read the other day is the entire global automotive industry buys around 60% of what Apple buy. I mean, that's one hell of a stat, isn't it?
Yeah.
So we are going to be at the back of the queue, unfortunately, and it also comes down to where are your margins, I guess. So, it's certainly way above my pay grade, Phil, to try and predict where that's going to be.
And as we said there, Curtis, I mean, he's in the middle of a lot of stuff, and that was only a small snippet of quite a detailed interview there with Daksh, and he obviously had a lot to say. But to be fair, he'd been on with a lot of things just in the week, really, and we caught up with him midweek. And as you said at the start of the show there, in between moving house and following an acquisition of the JLR site and other things that was going on in his world, and a lot of if as you said, I mean, you need to go and listen to the podcast, that interview with Daksh, because we cover a lot of industry topics that are relevant as of today, in terms of that agency modelling and the Stellantis and consolidation, etc. There's so much going on in the sector, and to be fair with Daksh, he did answer majority of those questions.
He answered them all, yes. And for a man who was moving house, he was quite happy to spend a fair bit of time with us. It's quite a long interview, but we've got a bank holiday weekend coming up, so what better time to sit down and enjoy it?
And marginally connected with that interview with Daksh there, in terms of that evolution of the sector. The and final this week is over with Car Dealer, and this is, as you said at the start there, this is Hendy partners with Kazoom to offer car hire direct from its dealerships. Now, with this, there was always this thing around agency or distribution sales models, that part of that move into agency modelling was for the OEMs to add their subscription service into that retail dealer environment. But Hendy's are certainly moving very quick with this at the minute.
Yeah, and it is a new name. Carzoom only launched this week. So the co-founder, Melanie Fazal, she's quoted in the story. And many thanks to Carzoom for actually reaching out to me, because they made me aware of this and sent me the press release. It's actually a really, really interesting story, this. So Carzoom have come up with this rental solution, which they're not even piloting it. They've rolled it out now with Hendy, and Hendy do run quite a few dealerships across the south. And the idea is that it enables Hendy to utilise any stock that they might have. I mean, bearing in mind what we've said in previous stories about, a sort of shortage of stock. But if they're sitting on demonstrators, if they're sitting on stock that's not selling at the moment, then these can be channeled into rental, and that the rental periods that they're talking about are 1 to 60 days. So it's an alternative to those longer term car subscriptions that you mentioned, and it does give an opportunity to utilize stock. And also what really appealed to me about this story was that I used to go over to the annual NADA trips with the guys at ASE, and whenever we went to a US dealer, there would always be a rental desk. I mean, bearing in mind the size, the sheer scale of the American dealers, but it was a tried and tested practice there that if you want to hire a car, you don't need to go to your local airport to do it. You just go to your local dealer and hire a car for 1 day, 2 weeks, whatever, because it's the convenience, and the stock is sitting there. So this is kind of similar to what CarZoom are doing over here. And I don't know if you've tried to get near to an airport recently, but it's actually very difficult. I mean, speaking from experience, Gatwick, I'm not far from Gatwick, they actually now charge you for pickup and drop-offs, collections, whatever. So going into Gatwick to hire a car is actually quite a challenge, whereas going to a local dealer to hire a car is a lot easier.
No, you're right, and I think this is everything now in this sort of this usership of vehicles, and some of the rental operators have done very well through the in the pandemic and as the pandemic has recovered around this sort of flexi rental of the market. And as you say, this is, if you think about the vehicle, it is a physical asset. It needs a location, it needs maintaining, it needs servicing, etc., and it makes a lot of sense what they're doing there. And as many ways that those there's vehicles sat there that have an opportunity to be utilised, to earn some revenue, whilst they're not, whilst they're sat on site. So it makes a lot of sense, this one. I mean, fantastic move from both Hendy's and with CarZoom as well. And as you say, I weren't aware of this business, but this has obviously moved very quickly below the radar.
Yeah, definitely. And Hendy are the first group to use this service, but talking to CarZoom that they are looking at rolling it out, and really forming a national network. So, interesting times ahead there for CarZoom.
So that's it for this week. So again, we've tried keeping the headlines a little bit lighter this week. Obviously, there with a great interview there with Derren Martin from Cap HPI at the start of the show. Obviously, giving you a bit of a sort of a snippet into the very insightful, very detailed interview this week with Daksh Gupta from Marshall Motor Holdings. So again, listen back to that interview. We'll try and get Derren Martin back on in the future. We'll try not to wait until the end of next month, the speed in which the market is moving now. But head over to the headlines. There's a lot of headlines being hitting the trade media this week on what's happening in the marketplace. So do check those out on any that we've not covered. And as we said earlier on, the eBay Motors May market view will be available as well from Monday. So we urge you to head over there and have a look at that in a little bit more detail than what we've gone into.
So that's all for now. You've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Thanks for joining us for all the chat at the matters. Have a great bank holiday weekend. Looks though we've finally got some decent weather. Hope you got some gas for your barbecue, Phil.
No.
Well, you see, you should have got some at home base in Rotherham.
Should have gone out. Yes.
By, yeah. So we're back next weekend with our take on the latest car retailing headlines from across the media. Until then, it's goodbye from me.
And it's goodbye from him.